Good morning, everyone, and welcome back to Morning Markets on Wednesday, the 15th of July. A couple of things to think about this morning, and there's a lot of news around in the market and in general over the past 24 hours. And I thought I'd just touch on a few of those quickly before then thinking about what was the impact on asset markets. The first of which I wanted to speak about was the developments of a vaccine in relation to COVID-19. As we know, there are many organisations and companies working towards this, and we get data on a fairly regular basis as to how they're progressing. Last night, after the close in the US market, we heard from Moderna, who had previously released some detail on their vaccine development programme, and they provided additional detail last night that spoke to the efficacy of their solution so far. Granted, it's in a very small and limited trial at this point with 45 individuals, but it has shown positive success, and it's given them enough information that they can now move to the next stage of that clinical trial process. So that's something that is on the positive side of COVID-19. I'm very conscious that over the past number of days I've just been talking about an increase in case count. So I thought it important to put that out there and to allow people to appreciate just the significant advances that are being made by institutions and companies in the search for vaccines and medical treatments. The other thing that I wanted to touch on was just the ongoing tit for tat, as I called it yesterday, with the relationship between the US and China. We had President Trump signing into law last night the Hong Kong Autonomy Act. Effectively, that brings Hong Kong into the same auspices of China from a US perspective, with the implications that has for business and trade with China and how financial institutions interact with Hong Kong by virtue of the change in this act. So that's an important point for us to continue to think about and see how that does play out, because there are ramifications of that. The other aspect of the China relationship that I wanted to touch on was just the UK's decision yesterday and the decision to remove Huawei from the 5G networks and to not allow them to be part of the ongoing development. If you remember back to earlier in the year, a compromise was reached where they could, or where Huawei would be up to a third of the 5G equipment network. So that's not going to happen. And indeed, the existing equipment needs to be removed by the end of 2027. So development that I suppose has many different and interesting ramifications to consider. What does it mean for the UK-China relationship over the medium term? What does it mean for the companies that are deploying 5G networks? Clearly this will come with an increased cost for them. And then I suppose overall, what does it mean for productivity? The rollout of 5G networks will be delayed, and that's clearly a negative for productivity and productivity development in the UK. So it's interesting to reflect on that just in terms of the unintended consequences of what's happened as a result of COVID-19 and how political and international relationships have been changed and have been shaped as a result of that. Turning then to earnings, we had a number of earnings reports yesterday from US financial institutions. They gave further insight just into how their businesses have evolved through the second quarter. I think the key thing to take away there is that we haven't seen a material change as yet in delinquencies or defaults on loans, particularly within the consumer segment. Some more evidence of that within the corporate segment, and that's specific to certain industries where we have seen, and we do know they have been more significantly impacted by COVID-19. The banks themselves, they continue to increase their provisioning levels against further deterioration in their loan books over the months ahead. The other thing to highlight there is just the difference between banks that were focused on Main Street, for want of a better way to describe them, and those that are more investment orientated. So the likes of JP Morgan and Citigroup who were able to use their trading businesses and to take advantage of the volatility in markets to offset some of the pressures that they were seeing elsewhere in their business. In the UK, with the OBR report, the Office for Budget Responsibility, and again that set out a base case scenario for the UK. And I'll come back and I'll touch on that more tomorrow when we've had the chance to look through that and digest some of the information that's there. Asset markets yesterday, little sort of change in the UK. We had the Euro stocks down about 80 basis points, and then we had a relatively better day in US equity markets where we saw the main indices there increase 1 to 2%. Bond markets, little change in the US, but given the sort of the weaker equity environment in Europe and in the UK to an extent, we did see yields come in further. So the UK 10-year gilt is now trading at 15 basis points, for example. That's it for today. Please join us again tomorrow. And again, as I mentioned last week, if you're finding the podcasts helpful, please do like it on YouTube or send us your comments, things that you would like to see included going forward. Many thanks.